Welcome to the Nexus International University Academic Series. Today, we study the fuel behind some of the world's most extraordinary companies, venture capital. By the end of this lesson, you will understand how bold ideas attract the money to grow, how investors take enormous risks for enormous rewards, and how this engine of innovation could power the next generation of African enterprise. Let us begin with a puzzle. Some of the largest companies in the world began as nothing more than an idea, in a small room, with founders who had almost no money. How did they grow so fast, so far? The answer, very often, is venture capital. It is one of the most powerful forces in the modern economy, the money that turns daring ideas into world-changing businesses. So let us understand exactly what it is. Venture capital is a form of financing in which investors provide money to young, high-growth companies, in exchange for a share of ownership. In return for their investment, they receive equity, a piece of the company itself. Now, to understand why venture capital exists at all, we must understand a problem. Imagine a brilliant young founder with a bold new idea. She needs money to grow. Where can she turn? A bank is unlikely to help. Banks lend to businesses with steady income, assets and a proven track record. A brand new, untested company with no profits and big dreams is simply too risky for a traditional loan. This is the funding gap that venture capital was created to fill. Here lies the core idea you must grasp. Venture capital is patient, high-risk money, invested in the hope of extraordinary growth. The investor knows that many of these young companies will fail. But they are betting that a few will succeed spectacularly. Let us understand that bet, because it defines the entire industry. A venture capitalist might invest in 10 companies. Several may fail completely. A few may do modestly. But perhaps one becomes a giant, and that single success can return more than all the others lost combined. This is called the power law of returns. Now let us meet the players in this world. On one side stands the entrepreneur, the founder, with the vision, the energy and the idea. On the other stands the investor, who brings the capital, and often much more. These investors come in stages. First, there are angel investors, wealthy individuals who invest their own money very early, when an idea is barely more than a dream. They are often the first believers. Then come the venture capital firms. These are professional companies that raise large funds and invest them in promising startups. Importantly, they usually invest other people's money, gathered from large institutions, on behalf of those investors. Now let us follow the journey of funding, because a startup grows through recognizable stages. Each stage has a name worth knowing. It often begins with seed funding, the earliest money, used to plant the idea and prove it can work. Then comes a Series A round, to build the product and find the right market. Then Series B, C and beyond, to scale up rapidly and expand. At each stage, the company is worth more, and raises more. This brings us to a crucial concept, valuation. Valuation is simply what a company is judged to be worth. When investors put in money, they receive equity based on that valuation. A higher valuation means founders give away a smaller share for the same money. Negotiating it well is an art. But here is something vital that beginners often miss. Venture capital is not just money. The best investors bring far more than cash. They bring experience, mentorship, valuable connections, and credibility. They open doors that money alone cannot. This is often called smart money. Now, every investor enters with one question in mind: how will I eventually get my reward? This is called the exit. Venture capitalists do not invest forever. They invest to grow a company, and then to realize their gains. There are two main exits. The first is an acquisition, where a larger company buys the startup. The second is an initial public offering, or IPO, where the company sells shares to the public on a stock exchange for the first time. Either way, the investors finally turn their ownership into real returns. Let us also be honest about the risks, for they are real. Most startups fail. Founders give up part of their ownership and some of their control. And investors can lose everything they put in. Venture capital is not a guarantee. It is a high-stakes partnership between risk and ambition. Now, why does all of this matter so deeply for Africa? Because our continent overflows with talented entrepreneurs and brilliant ideas, yet far too many cannot access the capital they need to grow. This funding gap is one of the greatest obstacles to African innovation. But the picture is changing fast. Across Africa, a vibrant startup ecosystem is rising, and venture capital is beginning to flow into technology, finance, agriculture, health and beyond. The founders who understand this world, and the investors who fund them wisely, will help shape the continent's future. And this is why these skills are so valuable. Whether you dream of founding your own company, of becoming an investor, or of advising the ventures that will define tomorrow, understanding venture capital is essential. The careers are exciting and growing. Venture capital analyst, investment associate, startup founder, fund manager, innovation and finance advisor. These are dynamic, influential and rewarding paths, at the very frontier of the modern economy. So as we close, hold on to the essentials. Venture capital is high-risk money invested in high-growth startups in exchange for equity. It fills the gap that banks will not. It lives by the power law, where a few great successes outweigh many failures. It funds companies in stages, adds smart money beyond cash, and seeks its reward through an exit. Behind every great startup story stands a partnership of vision and capital, of courage and belief. To understand that partnership is to understand how the boldest ideas of our age are built. At Nexus International University, Uganda, you can master this knowledge. Study venture capital through our hybrid learning and teaching model, online and on campus, built for the way you live and learn. Learn from anywhere, connect when it matters, and move forward without putting your ambitions on hold. Whatever your starting point, there is a pathway built for you. Enroll in a micro-credential to build job-ready skills fast. A bachelor's for your complete foundation. A postgraduate diploma to deepen your expertise. Or a master's to reach the highest level. One program to suit every stage of your journey. Expand your horizons at Nexus International University, Uganda. Enroll now. Visit www.niu.ac.ug today, and take the first step towards the future you deserve. Nexus International University. Boundless by design. Learn. Explore. Excel.